Is it really that simple? We're currently seeing a potential repeat of 2019 in terms of the macro range, not only just that, but also the bearish fractal developing in this range, really just following it. Scarily accurate for the time being. And it's not just that, it's also the 2021 potential bearish fractal that we're seeing also play out. Let's talk about it in today's video. Subscribe to the channel for more videos like this in the future. Like the content if you like this video, and let's dive right into it. So we're seeing that this bearish fractal is one that's repeating in 2023, so the pre-halving year, just like in 2019, which was also a pre-halving year. Potentially we're seeing this macro range also developing here, very similar to what we're seeing right now. The bearish fractal really just also mimicking the 2021 bull market phase as well. We just see a double top which forms, fakes out traders to form a relief rally into a lower high before losing the base of that fractal, turning it into a resistance before downside continuation. And what if we were to see that play out in this cycle right now? So we're currently seeing this relief rally right now. If we reject from these prices to form that lower high, we could drop back into 25, 26k, lose that level as a support, rebound from 23, 24, back into 26 to turn it into resistance before seeing trend continuation towards the downside to form our final bottom. And where could that final bottom occur? Well, it could be in the 20k region. Roughly speaking, I don't expect a crash of this magnitude like we saw, because this was a black swan event, but we don't even need such a crash. As you can see, if we took this like for like, the magnitude would get us to 11k, and I don't think that's going to be possible. I feel like we would get a lesser retracement, and not even that much. I feel like 20k is a sensible level. We're not going to get a black swan event, and if a black swan occurs, I still feel like we would still remain in this macro range, but not actually revisit this bear market bottom region. We'd probably form a higher low of some sort, somewhere like this in the 20k region, maybe slightly sub 20k, but generally speaking, still maintaining this range, never to revisit 15,500. I think that was the bottom, and I think we won't revisit that in the same way that we didn't get back into this 3k region in 2018, but we got quite close to it with a downside wick just to form a higher low. Same thing is probably going to happen in this cycle. So the bearish fractal that we're seeing across time, 2023, 2019, but also 2021, this bearish fractal, if it plays out, we're going to drop lower inside this range to look for a 20k region for support. And that's really what this sort of triangular market structure is even suggesting right now. The lower high right over here, the macro higher low. We haven't revisited this macro higher low as a support like we did in the previous cycle. 1, 2, 3 touches, 1, 2, and the third touch seems to be missing. The next 200 days going into the halving, maybe even less, the next 140 days going into the halving are going to be quite pivotal in securing a potential higher low here. Loads of people are actually going to get very scared and uncertain and doubtful once we do get to those 20k levels. So it's important that if this retrace does happen, not to belong to that psychology, to really think of it as a bargain buying opportunity, because it truly is going to be a bargain buying opportunity, because post halving we tend to see tremendous continuation towards the upside. So if we just do that, it's not going to be the same magnitude, but definitely something to really look forward to as we go into new all-time highs months after the halving event. So from current price levels, 30% is what we need, and we don't even need to see a 60-70% crash like we saw in March 2020. We just need to see something even a fraction of that to get to the macro higher low. Is that too much to ask? Is it unfeasible? Not necessarily, because we need to really focus on what's at stake here, and any retrace that we get in this pre-halving period is going to be quite important in positioning us for the post-halving rally. And the thing about current price levels, we are at this macro range high resistance in the same way that we were prior to the halving in 2019. But the thing about these levels right over here is that they are the same price levels right over here. But in the pre-halving period, there's a higher probability of seeing downside. Whereas in the post-halving period, there's a higher probability of these same price levels proceeding further upside. So if history repeats, then there's a higher probability of seeing downside in this pre-halving period, but the same price levels are going to have a higher probability of continuation to new all-time highs months after the halving. So it's interesting how the 27K price point is at a resistance right now with potential scope to see the macro high-low over time. But in the post-halving period, just months separating us from now and then around May, June, July 2024, the same price point represents something completely different right now, and post-halving is going to represent a great opportunity before trend continuation. So buying now, there is a bit of a risk that that investment won't appreciate unless we break out, of course, beyond here. But it just feels like there's a bit of weakness here. There is a bit of risk that we could see additional downside from here, especially if this lower high resistance continues to hold. But after the halving, we'd be buying into a confirmed uptrend. So the way that I think about this is that in the pre-halving period, I'd be looking for lower prices for Bitcoin rather than trying to buy and market buy at current prices, even though current prices months down the line are going to be quite attractive for reaccumulation, because historically we tend to also reject from the macro range high, but we don't reject anywhere near as much as we do in the pre-halving period. So post-halving, definitely this red region is going to see some resistance, some rejection, but generally this is going to be a reaccumulation range. After April 2024, we could see some sort of higher low, some ascending triangle of some sort develop here. What if we break out from this lower high, this black triangle, and break this lower high going into the halving, and then retrace a little bit post halving before breaking beyond 31K? That's something really to consider, because it doesn't really matter what happens after the halving. What matters is the retracement that we could get after the halving, but also prior to it, because we want to position ourselves in the best way possible for that post-halving parabolic price action. And how can we do that? We can do that in the pre-halving period. Any retracement from here is going to be a fantastic buy-side opportunity. But if we don't get that sort of pre-halving retrace, then around this period, the red post-halving resistance area, that's going to be a reaccumulation strategy. So essentially, accumulation should be happening in the pre-halving period, and then reaccumulation after the halving. Reaccumulation, or at least accumulation in this period, and then reaccumulation into a confirmed uptrend post-halving. So we're really running out of time of finding a potential bottom at the macro higher low. We only have 5 months of potential accumulation going into the halving. We are running out of time. We're running out of potential buy-side opportunities as we approach the halving. So this is a really important checkpoint for us to focus on for the coming months. Do we get it? Do we not get it? It really isn't a given that we get this retrace, but if the time for a retrace is to occur, it has to be within this next 6-month period in preparation for the halving, and then we'll probably get some post-halving appreciation as people get a bit more excited about it. But generally around the halving event itself, of course, we do see some sort of price action towards the upside, but for multiple weeks at a time around the halving and slightly beyond that halving event, we don't tend to see much price action. And this is where loads of people get shaken out because of just impatience and boredom. And you don't want to be in that category where you're not going to be wanting to jump on the train that is the Bitcoin uptrend at that point in time, because there are many ways to shake out a person, an investor, prior to the halving. It will be this potential crash should it happen. to the macro high low. It's going to be the shakeout around the halving, where we just see consolidation for multiple weeks at a time, people getting fed up of the halving not really translating to any price action, or at least parabolic price action. And then post halving, we're going to see just lots of reaccumulation and sideways price action for the most part, bouncing from maybe 25k to 31k for a few weeks, several weeks at a time. And that's also going to shake out people because of impatience, because people want to get quick. It's essentially trying to get rich quickly. But the thing with the halving is that we tend to see price appreciation for months after the halving. If we focus on this period, for instance, then from May 2020 to November 2021, that's a year and a half of just uninterrupted upside, really. So being shaken out around this period, or even around the period of the pre-halving retrace, it's such a shame, because that shakes you out from the massive uptrend that inevitably follows in the several months after the halving. So the key here is to, of course, try to make the most of any retracement in this pre-halving period, but also not to be shaken out in the immediate weeks after the halving, even if price isn't really doing much. Because at the moment, or at least at that point in time, price isn't going to be doing much. And the whole thing here is to not be impatient and just reaccumulate in this post-halving resistance area, and then wait for the confirmed uptrend. And then we'll probably break beyond 31k at that point in time for that post-halving accumulation, or at least appreciation. And historically speaking, a uptrend after the halving is around 518 to around 550 days long. So if that were to be the case even in this cycle, then maybe in mid-September, mid-October 2025 is when we'd see a bull market peak. So that's ample time before we see the parabolic uptrend end beyond 69k into new price discovery levels, maybe even 100k, maybe even beyond there. But it will take time. But for the time being, we should focus on this period. That's the most important thing to focus on, because this is going to be a period where we can best prepare for what's to come still several months down the line. And 2023 is that really important period to accumulate. And then in 2024 and 2025, that's when what we've accumulated starts to appreciate. I hope you enjoyed this video. Subscribe to the channel for more videos like this in the future. Like the video if you enjoy content and would like to see more like this going forward. Thank you so much for watching today, and I'll speak to you in the next one.